This is MNC, and I'll just put our pitchforks on it again. We've got our, go from our low to our high to our low, and that gives us our nice median line. Or we can also do our high to our low to our high, and I'll colour that one blue so we don't mix them up, and that gives us our downtrending pitchfork here. And I'll also add back in our 70% parallels just to show the symmetry in the blue pitchfork. So so that gives us we've got a couple of nice median lines there, or one nice bullish median line and one going downhill. And the idea is that price is returning to the median 80% of the time, and when it fails to return to a median line, it gives us an indication that there might be a change in the pattern of swings or in the trend. So this red median, I'll just draw in the parallels. I'll draw a line parallel as well. Just extend this top parallel out just to show you in this bottom parallel how that red pitchfork is actually capturing price for a couple of years now. It's been in that uptrend. I'll get rid of those for now. Then we have our blue pitchfork. The price has been returning to the median line until just very recently, the end of March, beginning of April. Prices failed to reach the median, and Hagopian's rule says that when price fails to reach a significant pivot point or a logical pivot point like a median line or a trend line, it'll often reverse back past the previous pivot, which was right there, and it's actually done that. It's come back down again, but it's stopping short of the median. So that's giving us an indication now that that perhaps we're breaking away from this downtrending blue pitchfork, and we're still, of course, following the red pitchfork median line up. I think since the last video, price has gone back to the median line again of the red pitchfork, so that's just showing us that it's that red uptrending pitchfork is still intact, and so that's if you're holding it, that's a good thing to know. We'll see. The other thing I'll look at, I might get rid of those for now. Just have a look at the volume. With volume spread analysis, we're looking at volume and what price did on volume. And so we have a significant volume bar here, and we've drawn I've gone from the close of that bar and the bottom of that bar, and we can see how price has been, that volume bar there has been dictating price for a long time now, and still is today to a degree. But if I get rid of that bar and moving closer, we now have another significant volume bar that's come into play, and that's this one here. So if I mark off the top close, I might do that blue, and I'll mark off the bottom, and I might get rid of this older line as well. And we can see that this volume bar now has been dictating the price. I think price closed above it once, but it hasn't been able to, apart from that, it hasn't been able to close above it, and it's actually closed below it once, but hasn't closed below it apart from that. So it's been trading in this new little channel. So and what that's telling us is it's trading in this channel, and that's actually quite bullish, I think, because it's showing us that perhaps the professional money are supporting this low at 37 cents. So you can see on this bar, when price came down to 37 cents, the volume kicked in, and it's a bullish bar on volume when it's hit the 37 cents. Even when this bar has come down below the 37 cents, it's kicked up pretty quickly on volume as well. So it's been supported. There's been volume. They're actually weak bars, but they're supported at the 37 cents. So that shows me that perhaps the selling pressure on those bars is being absorbed by the professional money, and that they're actually holding that above that price. And now, just in the last couple of days, suddenly after this big little bit of a move up, price has come down rapidly, but on very low volume. And then on the last bar, it looks like a very bearish bar because it's come down on volume, on high volume. It previously was lower volume, but it's come down on the higher volume, but it hasn't gone below the 37 cents. And then the next day, it's popped up. So that tells us that there's buying in the bottom of that bar. Otherwise, if the professional money were bearish the stock, then it couldn't go up the next day. So that, I would suggest, is your risk now. Short term anyway, that 37 cents looks like where the price is being supported by the professional end of the market. What else can I see? The other thing we see is, so we've had this big high up here, price has come down, and what we have is testing for supply at the bottom of this big up bar, this high volume bar. We have testing for supply, and we're looking for a test bar on low volume, and it's the low, and we've got one here. I'll just move this away for a minute. We've got one right there, and what it is, it's the lowest volume in 3 days, and 3 bars coming down into a support line or a previous area of supply, and it's very low volume, and it's closed on its high, and that's a little test bar, and that's just telling us that there's very little supply further down, which is what the professional end of the market is looking for. They're looking for low supply, so they're not having to compete with sellers when they want to mark up the price. And then we're looking for a confirmation bar, which is price closing higher than the high of this bar on slightly higher volume. Now we sort of get that on this bar here, but the volume is a little high. But it does dip down once more and kick back up at the 37 cents. So some people might have bought that at 39.5 cents, or thought, well, maybe if I put my order in at 37 cents, I might get lucky. But anyway, this bar, this bullish bar here, this bar here on volume, and these 2 bars on volume are telling me that we've got a bottom of 37 cents for the short term at least. If we go to the weekly, okay, what I might do, I might just connect these highs here and then just copy that parallel across and see what happens, and that gives us a nice little channel there. It's dipped below it once, but okay, and we're talking about test bars or price coming down to test for supply. Well, this one sort of is a test bar. It's come down into previous area. So this is a Japan bar, but it's not a proper test bar because it's not low volume. But what it does tell us is there's a lot of buying in that bar because it closed high, even though it's come off since and struggled to get back above there. There's still buying in this, a lot of buying in the bar, so it's still a bullish bar. And then price has come back and tested for supply back in all this volume. And what's interesting about this is in this bar, is that price hasn't been able to get down to the 50%. It's within the top half of this volume bar here, this widespread bar here. So that's actually quite bullish. Hang on, I'll try and get rid of these fibs. So that's actually quite bullish. There's our 37 cents again. So we also have what looks like a test bar there. It's come down on low volume, and we've got another one coming down further on low volume. It's not perfect because it's sort of not the lowest of the 3 bars, but it's still pretty low. And then price has gone up on slightly higher volume on the next bar. So to some that would be a buy-in, or you'd be looking up on the daily after you see this bar here to see if you can get a better entry. But if you bought on the close of the confirmation bar, I mean the last couple of weeks, that's where the close has been, even though it's gone lower and you might have been able to get a better entry. It's closed on 39.5 cents. You wouldn't be out of pocket if you bought on that bar. And so that's an example of a little test bar. But what's a better example than that of a test bar is this one, the last week. Because what we have is a very long bar going right down, and it went down very quickly and closing towards the high. And that's coloured red there. It's actually a very bullish bar because it's closing on the high, very low volume, and that is a classic test bar. Better than this one. You've got a few other ones down here, probably lower down, but that's a beauty. That's a very good, nice little test bar. And so what that tells you, I call it the bullshit bar, because price has gone right down here all of a sudden for no reason on very low volume, and then it's been snavelled up quickly. Well, if it's been snavelled up, why isn't the volume higher? Why aren't there more people buying? Well, that's because there's very few genuine sellers in this bar. So you wouldn't have been able to buy too much at these lower prices because that looks like a little shakeout, a little markdown, a proper test bar. And I think people were commenting during the week about the contrived closes on the MNC forum, how the closes looked BS. That's probably because they were, more than likely. Now on one of these, what we'd look for then, if this was the daily, we'd look for higher volume, slightly higher volume, and a close a bit above that. But we might not get that because it looks like we're getting a good announcement coming up after the trading halt's finished. So, but anyway, but it's just interesting. We get our perfect test bar, and they're rare. You don't get them all the time. They're very rare that you get them that good. It just happens to be that we get ours on the week of our trading halt, pending that announcement we've all been waiting for. So so that just goes to show you, doesn't it? But anyway, so that may kick in. But I probably, if I was taking a position and I was bullish the stock on the fundamentals, I probably would have jumped on after that test bar and confirmation. Or if I was looking at the daily, I might have pressed my luck and said, well, that 37 cents is being supported. Maybe that's where I should put my order, and I might have got filled, might not. But anyway, that was the risk anyway. And yeah, so it's going to be very interesting to see where price goes next, because we're at the bottom of this channel, and we've got a nice bullish test bar on very low supply, and it looks like it coincides with an announcement, which is typical of how the professional money work. They buy on down bars and they sell on up bars. They sell into good news because it gives them opportunity to they sell into demand.